Collapse file number 18. Subject, Credit Suisse of Zurich. Born 1856, the bank that built Switzerland's railways. Age at death, 167. Survived 2 world wars, the Great Depression, and the end of Swiss banking secrecy. Time taken to die, 1 weekend. Cause of death, 2 words spoken on live television. This is the Collapse Files. Sunday evening, March the 19th, 2023. Bern. The president of Switzerland walks to a podium to announce that one of the 2 great pillars of Swiss banking has been sold for less than the price of a football club. To understand how that sentence became possible, the file goes back to the beginning. 1856. Alfred Escher, politician, industrialist, the most powerful man in the young Swiss Federation, founds the Swiss credit institution, the bank the world will come to know as Credit Suisse. His statue still stands outside Zurich's main railway station, facing the tracks his bank paid for. Escher's bank financed the railways, then the tunnels through the Alps, then the electricity grid, the insurance companies, the machine works. Credit Suisse did not just serve the Swiss economy, it assembled it. For generations, its headquarters on Paradeplatz was shorthand for everything Swiss banking promised the world: discretion, solidity, permanence, because a bank is the only machine ever built that runs on trust alone. File that phrase, trust is the entire machine. And by the spring of 2023, the machine had been running on empty for longer than anyone understood. March 2023. In California, Silicon Valley Bank has just died in 48 hours. Regular viewers will find that autopsy in file number 7. Frightened money does what it always does. It hunts for the weakest big bank in the world. Wednesday, March the 15th. Bloomberg Television. The chairman of Saudi National Bank, Credit Suisse's largest shareholder, is asked a routine question. If the bank needed more capital, would the Saudis provide it? His answer, absolutely not. 2 words. He would later insist the words were taken out of context. It did not matter. By the time he finished the sentence, the machine that runs on trust had thrown a rod. Credit Suisse stock falls as much as 30% that day, closing down 24, an all-time low. The price of insuring its debt goes vertical. In Zurich, in Geneva, in Singapore, wealthy clients do not wait for clarification. That night, the Swiss National Bank offers Credit Suisse a lifeline, 50 billion francs. The bank announces it will draw on it. This is meant to end the story. It does not end the story. The money keeps leaving. By some accounts, as much as 10 billion francs a day is walking out the door, quietly, electronically, no queues on the pavement. A 21st century bank run is silent. That is what makes it unstoppable. And here the file takes its first turn, because the March panic did not kill Credit Suisse. When the coroners of the Swiss parliament later examined the body, they found the time of death was months earlier. The weekend was not the murder, it was the funeral. Rewind to the 1st of October, 2022. An Australian financial journalist named David Taylor posts a tweet. A credible source, he writes, tells him a major international investment bank is on the brink. He names no names, he doesn't have to. The internet fills in the blank. On Reddit, on Twitter, the guess hardens into certainty within hours. It's Credit Suisse. The tweet is deleted within days. The run it started is not. In the last 3 months of 2022, clients pull 110 billion francs out of Credit Suisse, roughly 2/3 of it in October alone. A century and a half of accumulated trust, unwound by one tweet from a man most clients had never heard of. But a tweet is a match. It is not the wood. The question this file actually turns on is, why was Credit Suisse the one bank on earth that everyone was ready to believe was dying? The answer is on the evidence board. Because for the previous decade, Credit Suisse had been running an almost unbroken experiment in how much scandal one institution can survive. Item Archegos, $5.5 billion vaporized in days, the single worst loss of any bank at that table. It is the biggest casualty in file number 3. Item Greensill, around $10 billion of client money frozen when a supply chain financier collapsed, with Credit Suisse funds holding the paper. Item: Mozambique, the tuna bond affair. Loans for a fishing fleet that barely fished, kickbacks in the hundreds of millions, and a guilty plea to wire fraud charges in America. Item: the spying affair. Private detectives hired to tail one of the bank's own departing executives through the streets of Zurich. The chief executive's office denied knowledge. The chief executive still had to go. Item: June 2022. A Swiss court convicts the bank itself of failing to stop money laundering for a cocaine trafficking ring. The first time in history a major Swiss bank is criminally convicted in its own country. One scandal is an accident, two is a pattern, a decade of them is a diagnosis. So when a stranger on the internet whispered that a big bank was dying, the world didn't ask which one, the world nodded. Now the weekend. Friday, March the 17th, 2023. In Bern, the federal government concludes that Credit Suisse will not survive Monday. There will be no rescue, there will be a sale, and there is exactly one possible buyer, the bank across the street. To force the marriage, the government reaches for emergency constitutional powers and suspends part of Swiss merger law. Neither bank's shareholders will be allowed to vote. Ownership itself set aside by decree. Sunday, March the 19th. UBS agrees to buy Credit Suisse for 3 billion francs in shares, about 76 centimes per share, for a stock that had closed on Friday at nearly 2 francs. The state throws in a 9 billion franc loss guarantee and the central bank 100 billion more in liquidity. And now the exhibit. Exhibit A in this file is not the sale. It is a decree issued the same day by FINMA, the Swiss regulator, addressed to the holders of a class of bonds called Additional Tier 1. 16.5 billion francs of those bonds, roughly $17 billion, written down to zero. Not a haircut, not a restructuring, zero. While the shareholders, who by every rule of finance stand last in line behind the bondholders, walked away with 3 billion. Every student of finance is taught the same hierarchy. Shareholders are wiped out first, bondholders after. In one Sunday decree, Switzerland, of all places, inverted it. Bond desks from London to Tokyo read the document twice, looking for the misprint. That evening, the president, the finance minister, and both bank chairmen stand in a row and insist, repeatedly, that this is not a bailout. The word they prefer is solution. Asian markets open in a few hours. The solution holds. Monday morning, some 50,000 Credit Suisse employees ride the trams to work at a bank that no longer controls its own future. The brass plates on Paradeplatz stay up for now. The institution behind them is already gone. 2 footnotes for the file. The Saudi chairman whose 2 words lit the fuse resigned within a fortnight, citing, his bank said, personal reasons. And the parliamentary inquiry, one of the rarest instruments in Swiss politics, delivered its verdict at the end of 2024. Years of mismanagement by the bank itself, and a regulator that had let Credit Suisse flatter its own capital numbers right up to the end. In mid-2024, Credit Suisse was formally merged out of existence. The name that built the Swiss railways is now a line item in a rival's annual report. One thread remains open. In October 2025, a Swiss federal court ruled that the $17 billion bond wipeout was unlawful, that the emergency had not met its own legal test. The regulator has appealed. As this file closes, $17 billion sits suspended between a decree and a judgment. The tally, 167 years of history, a trillion-franc balance sheet at its peak, 110 billion francs gone in a quarter, 17 billion in bonds erased overnight. Sale price, 3 billion, and the shareholders never got a vote. A bank is a machine that runs on trust. Credit Suisse ran out. File 18, closed.